Well, let's put the spotlight then on one such a set of numbers. We just spoke about a JK Tyres, and we've got Anuj Kathuria, who is the president India at JK Tyres, here to discuss the road ahead. Thanks so much for taking time out, and it has been stellar growth yet again in Q2. What has led to this, and which are the segments that's fueling the performance?
So we reported a net top line net revenue of 3,905 crores consolidated basis, and our EBITDA margins were at 15.3% for the quarter. So here we have seen that the top line has grown by 4% on a YOY basis, and we have actually this has come through our sustained efforts for a larger market presence, and this has enabled to boost our volumes, and this has come across segments and across product categories. We also had a very strategic focus on enriching our product mix again across all the product segments, and not to forget talking about the operational efficiencies. We have been working on that. Cost compression, operational efficiencies have also helped us to boost our margins.
Right. Mr. Kathuria, on margins, while they've seen an improvement on a sequential basis, do you see this sustaining in the third quarter? And how is it that you see your RM cost basket moving forward?
Very, very pertinent question. So the RM cost has been, in quarter one, we saw that it had come down, and there was a further softening in quarter two. Going forward, yes, there are certain challenges. We'll have to watch it very carefully. So this is the wait and watch game, especially when it comes to the crude oil, which way it goes. But even if suppose there is a little bit of a hardening, which is expected in the RM prices, we will have to bank upon the continued robustness in the demand. Demand is expected to be robust. We as an organization are also working on further premiumization in our product segments, and also the efforts on getting the efficiencies improved further. That also would continue, and with a better capacity utilization. So all these levers would act as the tailwind, and this would, to some extent, if there are headwinds on the RM side, it should be able to kind of sustain the level of margins that we have reported for quarter two.
Now, you announced a new capacity addition which will enhance your capacity by 20% by October 2025. What product line are you planning to use this facility for?
Yeah, so this capacity expansion proposal that has been announced, majorly this would be in the area of the passenger car radial tires. This would come up in our plants, both in Banmore as well as in Chennai. That is where we produce the passenger car radials. More details would be shared with all of you going forward. But definitely we are at around 95% utilization as of now in the overall utilization. So keeping that in mind and seeing that the demand in the market is robust and is likely to grow further. Also, we have a gestation period once we start working on this kind of a project, and that is why we have mentioned that these capacities would come into play by October of 2025. So keeping that in mind, and there is a robustness in the demand, so these capacities would definitely be required.
So in this capacity, will you be manufacturing and focusing on the SUV category? What is the share of SUV?
Yeah, so we have seen that in the OEM passenger car manufacturers, the share of SUVs has been going up steadily. Now it has reached a level of 55 to 60%, depending on which manufacturer we are talking about. So these SUVs, not only the numbers are growing, but the new facelifts and the new models of these SUVs are coming in higher rim sizes. And as we go to the higher rim sizes, naturally the margins are better. That is what we call as premiumization of the product. So we are working on this, and even our existing capacities and definitely the new capacities that are on the anvil will have the capability to produce these higher rim sizes. In fact, in the new capacities, we would be having the capability to go up to 22 inches in the PCR segment.
Right. And what are your plans regarding EV tyre manufacturing for the passenger vehicle segment? Anything that's materialized here?
The EV segment definitely holds a lot of promise, and it would be eventually playing out. We will have to wait and watch as to the time frames, but we are getting our products ready. Many of the products are under validation. Some of them are also under serial production. The tires, the JUXE, which is used on the intra-city buses, the EVs, which are right now being planned in large volumes by each of the state transport undertakings. So that would be the high volume requirement as far as EV tires are concerned for the TBR range. We would also be having requirements coming up in the passenger car. So we have got our products ready. The good news is that all our capacities, which are existing as well as the new ones, do have the capability, and it is the capability is interchangeable between the current range of tires and when we have to produce the EV tires. The EV tires basically have a lower rolling resistance. They also have lower noise levels and definitely have to be lighter in weight. But having said that, it does not require a different manufacturing facility. Definitely the products have to be designed, developed. The compounds that go into it have to be different. But as far as the manufacturing facility is concerned, it remains the same.
As your debt levels have risen with your new capacity addition, now how much do you think you will be able to pay out once the capacity kicks in?
See, first, before that, I would like to also share with you that we had already shared with you our debt reduction plan, both for the short term as well as the long term. Even during this quarter, the overall debt has further reduced. If I go to March 2023, it was at around 4,500 crores, and this has come down to around 4,080 crores. So there has been a substantial reduction in the debt, and this is as per plan. Further, we would also like to definitely another important point is that our net debt to EBITDA has improved significantly. It used to be around 3.4x. It has come down to 2.27x. So that is something which is definitely giving us the confidence that going forward, even when we undertake these expansion programs, we would be able to finance these as a combination of debt, but more importantly, through either equity or through internal accruals.
All right, and the last time you had said that export demand is expected to pick up in the second half. So what are your plans to grow this number?
See, just let me try to give a context first. If you see the last financial year, the first half was quite robust for the export demand, but it had come down sharply during the second half of the year. But quarter one, we saw some recovery, and quarter two has been even better as compared to quarter one for exports. And our consolidated exports, both India operations as well as Mexico operations put together, there has been a robust double-digit growth in quarter two as compared to quarter one. So last year, second half was a low 6 months period for exports. So we expect that this year, the second half of the fiscal should be definitely better than the previous year's second half. So we are very confident about this, and we are looking forward to it. Definitely, there would be the impact of the seasonal demand, the holidays. Quarter three definitely is not a very robust quarter for exports. There is a year-end change. But quarter four going forward should again be quite good. for exports.
Right. You're planning for more price hikes given the crude oil rise. Is that a fair assumption?
See, again, to put a little bit of context over here, in the last, say, few quarters, maybe 10 to 12 quarters, we had seen that the raw material prices were constantly going up and the price increases were being taken. But from quarter two of last financial year, the raw material prices first started softening and then they have come down steadily. But we had gone through the process of the price increases in the last financial year. This year, there have been no major price increases per se. But having said that, there have been select SKUs where there have been certain price improvements that have been done. Also, our overall sales realization gets better when we are enriching our product mix with the premium products, whether it is in PCR or whether it is in TBR. We are focusing more towards going for the premium products. Definitely, those products give us a better margin.
All right. Thank you so much for taking time out and joining in.